Thank you, Ritesh. Good evening, everyone, and thank you for joining us today. On behalf of Bandhan Bank, I am pleased to extend a very warm welcome to all participants on our earnings call for the third quarter of financial year 25-26. I hope you and your families had a wonderful start to the new year, and I wish you continued good health, prosperity, and success in the months ahead. This quarter was marked by strengthening across our core businesses. In line with our strategic focus on quality growth, we saw steady momentum in advances, improvement in the EB book, or more popularly known as microfinance book, and further strengthening of the secured book. On the liability side, our continued push towards granularity resulted in stronger retail mobilization and a calibrated reduction in high-cost bulk deposits. Margins improved sequentially as the cost of funds eased and asset quality trends moved in the right direction with lower stress formation and reduced NPAs. While these are positive outcomes, we remain sharply focused on accelerating CASA and improving asset quality further. I now move to the performance of Bandhan Bank for Q3 FY26 and the 9-month FY26. The quarter demonstrated several underlying strengths across our core businesses. Our advances continued to show healthy momentum with underlying growth remaining strong even after accounting for the recent NPA sale to the ARCs. The microfinance of the EB portfolio has stabilized, reversing the earlier trend of degrowth, and our secured book continues to strengthen, improving the secured mix further. On the liability side, deposits granularity improved meaningfully, supported by strong retail deposit mobilization, even as we deliberately pared down high-cost bulk deposits to improve the quality of our liability profile. Margins also showed an encouraging upward turn, aided by a sustained reduction in the cost of funds and improving the deposit mix. Asset quality trends were constructive, with lower slippages quarter on quarter, better early stage indicators, and an improved NPAs following the ARC sale. In terms of areas, we are sharpening further. CASA growth remains soft industry-wide, but we are intensifying our efforts to strengthen customer engagement and enhance product propositions. Operating expenses remain well managed and broadly in line with our guidance, despite certain regulatory-driven one-offs. And while slippages have improved, we continue to remain focused on further strengthening recoveries, reducing incremental stress, and moving steadily towards our medium-term credit cost aspirations. Overall, the quarter demonstrates improving fundamentals and continued balance sheet resilience. As of 31st December 2025, our gross advances stood at about 1.45 lakh crore, reflecting healthy growth of 10% year-on-year. On the liability side, deposits reached 1.57 lakh crore, growing faster than advances on year-to-year basis, a reflection of our strategic focus on maintaining a balanced and sustainable franchise. Retail term deposits continued their strong momentum, growing by over 36% year-on-year, underscoring the increasing trust of our customers and the strength of branch network. CASA now stands at 27% of total deposits, and the overall retail mix, including CASA and retail term deposits, improved further to 72%, signaling continued strengthening of deposit granularity and stability. Aligned with our diversification agenda, our secured book at 57% of overall advances continue to gain share within the portfolio, supported by steady growth across secured products. This shift reinforces the improving risk profile and balance within our advance mix. Our NIM for the quarter at 5.9% remained healthy, showing sequential improvement as the benefit of lower cost of funds flowed through. For the 9-month period as well, NIMs remained largely stable at 6%. Gross and net NPAs, they improved significantly at 3.3% and 1% respectively, while our PCR, inclusive of technical write-offs, improved slightly to 84.3%. For Q3 financial year 26, our net total income stood at 3,379 crore, while operating profit was 1,445 crore. The bank reported a PAT of rupees 206 crore for the quarter. This is a significant improvement from the earlier quarter where we reported 112 crores as PAT. For 9-month financial year 26, ROA and ROE stood at 0.5% and 4% respectively. Our capital position remains robust, including 9-month financial year 26 profit. The capital adequacy ratio stands at 17.8% and Tier 1 capital at 17%, providing ample headroom to support future growth. We also continue to expand our distribution footprint, taking the branch network to 1,831 branches, with 20 new branches added during the quarter, and 57 of the housing financial centers were converted into full-fledged banking branches. This expansion enhances our reach and strengthens our stability to serve customers more efficiently. Let me now take a moment to highlight two significant developments during the quarter. The first relates to the portfolio sale of NPAs and return of accounts to ARCs, and the second pertains to the impact of the newly notified labor codes. As part of our ongoing effort to strengthen the balance sheet, we executed the sale of NPAs and return of accounts of unsecured EV and ABG portfolio to ARCs during the quarter. These are mostly the microfinance portfolio and the unsecured loans. We sold 3,707 crore of return of portfolio, which was realized at a valuation of roughly 9%. Out of the total security receipts issued for this portfolio, our share stood at about 62%. On the cash side, we received rupees 126 crore, and this inflow has been recorded as under other income. In addition to this, we also sold 3,165 crores of NPAs, unsecured loan in the EV and ABG book at a valuation of around 18%. Our share of SRs for this pool was approximately 47%. The transaction generated rupees 303 crores of cash for the bank, and this has been used to offset our provisions under the provisions line item in the profit and loss account. Together, these actions reflect our continued focus on strengthening the balance sheet while ensuring disciplined resolution of stressed assets. The second key development relates to the new labor codes. On 21st November 2025, the Government of India formally notified the 4 labor codes. The bank has undertaken a detailed assessment of their impact wherever applicable, particularly with respect to the revised definition of wages. As a result of this assessment, we have created an incremental provision of rupees 120 crore towards gratuity during the quarter. To conclude, this has been a quarter of steady progress and strengthening fundamentals for Bandhan Bank. We continue to execute with discipline across all strategic priorities, driving quality growth, deepening our retail franchise, enhancing our digital capabilities, and reinforcing our risk and control frameworks. While there is more work ahead, the trajectory is encouraging, and we remain fully committed to building a stronger, more resilient, and more diversified bank. I would like to thank our customers, employees, shareholders, and all stakeholders for their continued trust and support. Thank you.
Thank you, sir, for that informative beginning.